Good afternoon. This is Mr. Not Advice. It is Monday, August 3rd, 2026. This is my end of the day update. As always, this is for entertainment and education purposes only. All right, the market was up strongly today, and that was based on the pause that I guess that is occurring in terms of lack of shooting going on in Iran. Although the US or Trump continues to babble about a deal, well, Iran says they're not even talking. So you all know that I'm sick and tired of hearing the great orange idiot talking. But today was, I think, as much a result of the flows. We had a lot of selling at the end of July. It's the first day of the trading month. I think that had a lot to do with the bullish move today in stocks. Also, the move in stocks was not accompanied by broad-based volume, which I'll be showing you shortly here. And then we also had uh, Japanese intervention is starting to fade, and that showed through the US dollar being flat on the day. Oil was down, stocks are up, bond yields are down, but not as much as you would expect if you only were looking at the stock market. Oil tumbled back again below the 80 level, which is a very congested area after President Trump once again called off a planned attack. I think the mother of all attacks since World War II, he said, and said new talks with the Islamic Republic would begin today. Of course, there were no new talks. And then later in the day, a U.S. spokesperson said no new talks are planned. But overall, because there's not shooting going on, it appears as though the market is in a wait and see mode after the news, not in the knee jerk reaction mode. Although, as Mr. Arne Rasmussen, chief analyst at Global Risk Management, said, we have not really moved closer to any solution. While some ships are continuing to cross the strait, there is still a significant threat to vessels in the water that highlight a persistent risk for shipping. And as long as that risk is in place, it's going to be continue to elevate the price of oil. On the bright side, the crack spread is started to close with both diesel and wholesale gasoline products tumbling today. That's despite the fact that refining capacity remains very constrained. And that's, as I said in my weekend update, because Ukraine has taken 35% of Russia's refining capacity offline through their continued attacks. All right, let's look at the overall market. So we had supportive earnings are backing stocks or supporting stocks into the new month, along with a supportive early week taco trade. Futures gapped up this morning around a 0.5% at the open last night, and that was on the back of taco talks. Stabilized in the U.S. cash open, which actually saw an immediate knee-jerk reaction selling puke at the open, which pulled the Nasdaq into the red briefly. That dip was bought very quickly, and Nasdaq led the charge higher among all U.S. majors. Dow lagged, but still up bigly. I believe this is first of the month positioning, not anything more than that. And I also believe is we were in a very short-term oversold situation too. We had massive positive delta flow this afternoon from zero DTE traders, and that helped also push the indexes higher. $10 billion worth of zero DTE trading today. Activity level today, according to Goldman Sachs, it was only a 4 out of 10. And so their commentary is that this rally today is happening without heavy engagement. Summer doldrums would do that. Hedge funds were 2% buy to the buy side, concentrated in the most traded stocks and healthcare. And long onlys were 5% better to buy, concentrated in the most traded stocks. Very positive breadth today. Supported the idea that broadening out narratives working with airline, media, home builders, restaurants, payments, credit cards, all leading. This is the S&P, the blue line, the S&P advanced decline line today was very positive today. This is your zero level, and that helped drive prices higher. Again, I'll repeat it again. I think this is more to do with the selling and the just the wicked volatility of last week and the strong selling than anything else. Goldman Sachs traders noted that this was very squeezy feeling with the most shorted losers, which includes meme stocks, software, and Mag 7, all at the top of the leaderboard today. AI stocks were outperforming XAI with the S&P 493 today, actually lagging today. Although it still was a green day, the Mag 7 continues to massively outperform the S&P 493, so there certainly seems to be a regrossing, albeit moderate, going into tech stocks right now. Momentum's rebound from last week, however, stalled, despite the fact that it did recover solidly off of a really ugly open. So these are all baskets, by the way. So Goldman Sachs high beta momentum did not do as well as the overall market today. It did recover off of its lows, but when you look at it, it's largely unchanged from Friday, that particular basket. Memory names were soft on the day, weighed by overnight weakness in South Korean chip makers, and there is a growing anxiety around Chinese chip manufacturing. We had the SOX is underperforming the Nasdaq. Here's the SOX. Here's the Nasdaq. Is underperforming the Nasdaq meaningfully. Components like Coherent and Corning and Nvidia are holding up, but ARM and Micron and Intel were all laggards today. Micron actually was negative until about 35 minutes before the close. I was on a call with StarPack. I was negative by $1 until it did finish up for the day. Gamma has flipped positive, which means that markets are going to tend to mean revert rather than extend trends intraday. So we're not in a negative gamma situation where rallies are bought and chased and dips are sold. That's going to constrain the strength of the rallies or the extension of the rallies also, but does provide some downside protection. Looking at momentum traders, CTAs are poised to reverse most of their selling last week. We've got over the next week on a flat tape, they are buyers of 2.2 billion stocks in the US, remember indexes and ETFs. In an up tape, they are buyers of 2.9. And in a down tape, they're sellers of 4.29. You may have seen some news that CTAs, there is a $158 billion sell pressure that could come to the market. Well, over the next 1 month on a flat tape, the CTAs are buyers of 8 billion, up tape buyers of 15, but in a down tape, they are globally sellers of 158 billion, which 55 billion out of the US. So if we get a down tape or downtrend into the month, they are poised to start selling again. Very exciting. And that's what this chart shows, by the way. Key levels, if we're looking for those, pivot levels, short term, 75, 74.53, medium term, support level, 72.24, and long term, 67.72. I'd say 7,000 also. Translation, according to Goldman Sachs, is modest upside potential, major downside risk. So we're back in the playing with fire scenario. That's just great. YENtervention. The intervention that was done, by the way, was through a mechanism that existed during the great financial crisis. And what it's allowing Japan to do is they're able to use their treasury holdings as collateral to access dollars rather than selling the bonds on the open market to raise cash. This actually was created during the pandemic, of 2020, to allow counterparties to raise liquidity without overly disrupting the treasury market. So, no, Japan is not selling a shit ton of treasuries. They're borrowing against their treasuries to get dollar access. They use those dollars to sell into the market, which is weak for the dollar and supports the yen. However, as you can see from this chart here, that the market participants, every single intervention, the market traders are fading those spikes. So every time the yen gets strength, the market is selling them off. And then finally, if there's something that I watch that tells me the volatility itself and the ability for trends to last longer than a day, momentum trends, we have to look at this volatility of momentum which is Goldman Sachs High Beta Momentum Basket. And as you can see, relative to the VIX itself, it is massively high. So until we see this constructively really come back down, it's going to be a difficult trade. The comment is that we suspect, in quotes, we suspect few will be willing to chase or add aggressively, especially with the yen carry trade volatility likely to pick up if the yen intervention continues, especially with midterms looming around the corner. Morgan Stanley's Nick Savoni noted over the weekend, beneath the volatility, it doesn't feel like there's a broader story that has actually changed nearly as much as the price action might suggest. Earnings continue to surprise to the upside. AI investment remains firmly intact, and macro data continues to paint a picture of an economy that's slowing only at the margins rather than breaking. Markets have a habit of testing conviction before rewarding it. And perhaps that's exactly what the recent price action has been. But stepping back, macro will probably take more of the center stage focus, according to Goldman Sachs derivatives specialist Lee Coopersmith. As earnings season fades, attention naturally shifts back towards rates, inflation, and growth. Treasury volatility has started to reaccelerate. Real yields remain near cycle highs, and historically, that's not an environment where equity volatility stays compressed. That Treasury volatility is going to remain as long as that goes on. We're starting to hear whispers about the yen carry trade uh, and its effect on the market in a negative manner. And typically, when those two things are going on, volatility does not stay compressed. So they end it with a simple statement of, do you feel lucky? Looking at individual stocks today, you look at PCT, right? And certainly this is a breakout of this 650 level over the 7 level. The next area, the target is about 750. We can't enter a trade because of earnings coming up here in 3 days. Otherwise, we would be looking at EOSE. Same thing going on here. We had the low close doji last week, Thursday confirmed today, almost an engulfing candle, but we have earnings in 2 days. So nothing we can do about that. Do I think we're done going down until we get through earnings? No, because earnings typically for them have not been anything entirely special. As I said, Bitcoin had a strong day today, but if we drill in today, what is it? It's merely a 50% retrace of Friday's candle. So while some Bitcoiners are getting bonered up about it, I wouldn't be too bonered up because Michael Saylor announced what? That he's going to be selling 5 billion worth of Bitcoin. That's going to put some sell pressure on the market. Other than that, we do have a trade that's going to be going out tonight. Looks very good. And with a very simple stop, which is right below today's low. So we have plenty of room on the MACD, and certainly the moving averages, the 50-day, we've cleared that, and looks like we're starting to curl up on that. We cleared the 200-day with strength. So looking at the overall market, I think the overall market, quite frankly, nothing has changed since Friday. The only thing that's changed is another couple of days of no shooting, and it's the beginning of the month. So we could very well see selling tomorrow or the next day. When you see a week like last week where the leaders really dive down really, really hard, it is normal to see this type of snapback rally. Okay. And CoreWeave is a perfect example, up 20%. Are you telling me something changed from Friday to today? And CoreWeave would be a possible trade if we didn't have earnings. But as I look at the overall chart, right around 88-ish, 90-ish is where CoreWeave should reverse if we look at the standard deviation channel. I think it's super important not to get all bonered up about this. We have significant resistance up here in the 94 level with 200-day moving average in the 50. I don't think that by any stretch of the imagination that we are out of this danger, nor do I think that we have made cycle lows, by the way. I think the low gets tested again. I don't know what is going to cause that, but the market remains, I believe, very fragile. And I think a lot of that has to do with what's exaggerating that are the summer doldrums and lack of volume in the market. So anyway, I hope you had a good start to the week, and I will see you on the boardroom tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping.